January 2023 market numbers are in, and we got a little bit of a blip, but why also are the interest rates going to not affect us like they did in 2008 and during the oil field crisis? Stay tuned. Hey, this is Robbie with Robbie, Breaux and team at eXp Realty. And first want to jump in. We had a little bit of a slow start when we were talking about the market activity. We had a little bit of a hangover from the holidays that have been running in. Interest rates had jumped up. Good news, they're actually on their way down. So jumping right in, January 2023, had a little bit of a slow start. Remember, we're competing against 2%, 3% interest rates at the very beginning of the year. So from this time last year, 2023 had 178 homes sold compared to 348. That's a 49% decrease in the total number of homes that sold. Dollar volume is a similar number. We were at 47 million closed compared to 91.9 million closed in January of 2022. A lot of that is going to be indicative of interest rates. They never in the history of the market or any time we've ever had any of the interest rates that have been running has it ever doubled in one calendar year. So we're kind of living in some very strange times that are going on. So what are we looking at as far as what are some of the leading indicators of what can expect moving forward towards the end of quarter one and beginning of quarter two moving forward this year? So first thing we like to take a look at, how many homes are coming off the market? We had a 32.6% decrease in the total number of homes coming off the market. That's pending sales. That's when a buyer and a seller have a meeting of the minds, terms, price, conditions, all that other fun stuff that makes it there. That's down 32%, but that's actually a 38% increase compared to December 2022. So while we did see a decrease in the total number of pending contracts from January 22 to 23, we did see an uptick from December. So things are moving in the right direction as far as activity is concerned. Next, supply, the number of homes that are coming onto the market. Think of the new real estate signs that are out in the front yards in your favorite neighborhood that are out there. That's down 41%. So we had 250 new homes compared to 422. That's a 41% decrease. Now, all these big numbers and all these decreases sound really kind of scary. So what does that mean? If we have 41% fewer things to be able to choose from and things are falling off the market 32% slower, we actually have a 9% drop in the available inventory for things for buyers to be able to choose from. That is going to help keep homes values staying steady. So what does that happen to look like? And before we jump in, average sales price stayed relatively flat. We were a 0.14% increase in total sales price. We're $264,500 versus $264,100, about a $400 increase in total sales price. Now, we did see an uptick in the total days on market, 61 compared to 28 days on the market. We're starting to creep up to have a little bit more normal time on market compared to what we have been in years past. So what does all this fun stuff mean? Are we going to run into 2008 numbers where, we had drastic drops in value, or oil field crisis is something out here all the time? So what I wanted to do was jump in and show you guys a graph courtesy of Market Scopes Consulting and Mr. Bill Bakke, the Oracle, if you will. This is a graph that shows a 40-year representation of all homes in all of Acadiana as far as the sales are concerned over the last 40 years. So you got 1982 jumping all the way down to 2022. So it's kind of tough to be able to see this thing popping up here, but at the very bottom left-hand corner, there were 1,378 sales compared to 6,312 sales in 2022. We had an apex of 7,300 in 2021, a drop of 6,300 in 2022. Had a hell of a freight train, but it's relatively even compared to what we were at 2021, and a pretty significant increase compared to 2020. They're at 5,600 compared to 6,300. So we're still on the upward trajectory whenever we take a look at that. So these sales have been jumping in. So I want you guys to kind of keep an eye on that. When we're looking at our the dollar volume, it actually tells us a similar story. So again, 40-year projective, we had $1.7 billion in total sales volume compared to 1.586 total sales volume for 2022. While there was a decrease from 2021, it's still a pretty good size increase compared to 2020, from 1.3 billion to almost 1.6. Massive amount of inventory being moved. When you look at 1982, we were at $127 million 40 years ago worth of inventory. So one of the things that was very prevalent when we were taking a look at the 1980s, and then if we take a look at 1985 and even 82, 83, 84, we had 30. The red line represents the total number of new listings. The green line or graph shows a representative of how many sales occurred. So notice that there's a pretty big gap between where the green line stops and the red line stops. And at the apex in 1985, we had 7,874 homes for sale and only 1,900 homes closed that year. That's a massive, massive gap. That's almost 5 to 6 to 1 new listings on the market compared to homes that actually sold. When you fast forward, moving on to 2022, we had 7,400 homes on the market, which is 500 fewer homes on the market than what we had in 1985. We had 6,300 homes sell, which is almost 4x more than what we did almost 5x more than what we had in years past. So closer to a 1-to-1 ratio when we are taking a look at what those homes, what the supply compared to the number of sales. So the closer that is to 1-to-1, typically we don't see as much movement moving that price point down. The homes that we are seeing that have been sitting on the market, typically what's happening is we're having folks that are still trying to stretch to get 2021 numbers, trying to push the pace of the market. And right now we're just not at that spot. So moving forward, interest rates been a super hot topic over the last couple of months. We saw 7% towards the end of last year. That started teetering down. We're actually starting to see a little bit of a glimmer of hope of seeing a 5 at the beginning. We've seen some 5.875 and some 5.99s on 30-year fixed rate conventional mortgage, dropping about a half a point, anywhere from 5.3 to 5.5, depending on credit scores. And then government loans have been somewhere in the middle. So keeping that in mind, we're starting to see the affordability of the mortgage note come back down to normal. Hopefully we'll see a little bit more reprieve. Stay tuned for that a little bit more. Hopefully we'll get a little bit more action moving that forward. So what does that mean for 2023? Right now, because we're having an increase in the time on market, what we are seeing is sellers that have been on the market for a good while that haven't made some adjustments on price. Some of them we're getting a little bit more wiggle room. We're able to work in some closing costs. We're able to get some price reductions. It's not Black Friday or anything like that, but we are getting some movement and some we're getting a little bit of wiggle room compared to what we were in the past. So we have some programs that are out there to be able to help get the affordability back on the buyer side. Make sure you chat with us. We've got the 2-1 buy down program. Got more information about that for you guys. So the move up buyers, great opportunity. If you're on the lower end, we still have very, very limited inventory and not a lot of movement as far as price. A little bit, you're in a much better position, even if you bought in 2020, possibly even 2021, to be able to make some money and capitalize on the rates, be able to get that down, still lower your note, and kind of a best of both worlds win-win. So if you're interested in seeing what your equity position happens to look like from that perspective to be able to go and move up, I'd love to hear from you. Give me a call. You can reach me on my personal cell, 337-658-5690. You can shoot me a direct message or email us info@robbiebreaux.com. I'd love to hear from you. As always, thank you so much for watching. We'll see you next month.